Hello, folks. Yeah, welcome on board. It's Matex again. So guys, I hope all of you are fine and good of health. And it's happy again. We have reached another Sunday that we need to do analysis for the coming week. Last week we did analysis here together and the week was very swift, very amazing. And some of us got paid well at the end of the week. So again, we hope that this coming week again, it will be good, because what we always expect is at the end of the week, at least we get paid something. So what's wrong with this one? Okay, so guys, we will look at just very few pairs, and you will relate with according to your analysis that let's say according to your strategy that you're trading. Yeah, I don't know what strategy you're using, but according to the strategy that I'm using, if they may confluence with your strategy, that will be a good confluence for you to be confident about your anticipation for the coming week. So we will look at the dollar index. The reason for this, so that it gives us a clear bias about what we should be expecting the dollar, what we should be expecting from the dollar. That's why we have to analyze the dollar index. And then we look at the pound, which is the cable, then the fiber, then the dollar card, and last we look at the gold. So before we go too far, let's see on economical side what we have. Let's see economically what we have here. On high impact news, mostly those are the ones I'm interested in. On Monday, there's no economic news that will be out, so it will be normal market conditions. This doesn't mean that the market will not move. The market will move, but in normal market conditions. Yeah. And on Tuesday, we'll have Australian dollar. Okay, this 3M. Okay, this in Asian session. Okay. I won't be concerned with this one because at this time trading plan won't fit in, because I trade during London and New York sessions only. So this one is during Asian session. So I don't think it will fit my trading plan. So I'll be only interested with this one. We have a core retail sales of monthly and the retail sales of monthly. This will be New York. Yeah, that's on Tuesday. So be aware of this one. And on Wednesday, we have during London, we have CPI yearly for the pound. Wow, this one too, you will be careful with this one. And the same day, we have card news, CPI monthly. Yeah, should also, this will be New York. We should also make sure we be careful with this one. Thursday and Friday, we have nothing. So guys, this week looks cool. So the move that you'll be able to see this week will be over normal market condition. There won't be those crazy moves that finds you unaware, because most of the days you've seen, we don't have those high impact news that may affect the market at large. Yeah? Just a few of them. That's on Tuesday and Wednesday only. So let's look at the dollar index. The dollar index for the past Generally, from daily time frame, if you can be able to see, it has been bullish from I don't need to be so insightful. Let me just go straight to the point. Anyway, on monthly time frame, that's where I want to derive the key time frame. There is this fair value gap here that was left when the market was dropping. Yeah, this fair value gap has been our liquidity draw for a long time since the market was down here. Yeah, we have always been expecting the price to mitigate this fair value gap. So last week, the market was able at least to cover 50% of this fair value gap. So here is where we expect now that maybe this week, the price will be able to do what? To fill this gap before we resume. Maybe we reverse or retrace, but at least we need to see a fill of this gap before we start selling again. I don't know up to where we will sell, but the first thing you need to understand, the price needs to fill this fair value gap because it has been our liquidity draw. Now, when you look at weekly time frame again, you can see the same fair value gap. And to the left, you can be able to see this, that one too. Really? I think my chart is shared. Let me redo it again. Who else is not seeing my chart? Okay. I was talking about the index. I was talking about the dollar index. From monthly time frame, we had this fair value gap that we always have been expecting it to be mitigated before we think about selling again. Yeah, and when we look at weekly time frame, we can be able to see that at least last week, the price was able to cover 50% of this gap. And most probably this coming week, the price may fill the gap before we reverse. And again, you can be able to see that in weekly time frame, we have this zone here, all of this. Gives us a confluence for the price to do this. Then we drop. So the key area you are supposed to look at is how the price will react when it will complete filling the monthly fair value gap, because that's where you'll be able to find this zone, which is here. Let's see what we have in daily time frame first of all. What's wrong with this one? Yeah. So look at this. Last week, after price playing this, heading to this gap, the top of the gap, which is this zone, and this was that zone from the other candle, the green candle that was to the left. This is another critical area too. But for me, I'm expecting this, yeah, the price at least to fill the gap up to this zone before we start selling off. So in 4-hour time frame, you can be able to see that I need to remove this one. We are done with it. This was last week. Okay. So we have a breakout structure. Here we have a 4-hour mitigation block. So this will be our target after we have mitigated this gap that is still remaining above here. So if we mitigate this, then we'll be selling from up here, targeting this. So this means that the dollar, possibly this week, it will be bullish, maybe on Monday, and or just Monday, then Tuesday, Wednesday, Thursday will be a drop, then a little pullback on Friday. Or on Monday, the price to continue consolidating before breaking out up on Tuesday, then drop. So what you should be doing is looking and watching how the price is gonna handle out of this range. Yeah, you see this range? This is what we are expecting the price to break out from. If it breaks out to the downside, then there's a possibility that they will mitigate this mitigation block before going up to close this gap, and then we resume the downtrend. That's scenario one. Scenario two, if they break to the upside, then that is a possibility that the price is going to fill that monthly fair value gap that I showed you before we do what? We start selling. So it's for you to watch and see what kind of price action the price will give you during Monday. If in case the price will be able to be at this zone on Monday, and most probably give you an entry technique that you usually use according to your strategy to take the trade, that's when we'll be selling from this zone. But my point of interest, it's above here. So the conclusion about the dollar index, I expect it to be a little bullish before we drop. And this is just very few pips up here. Yeah, less than 50 pips. So this can be a turtle soup for the week. To form a high of the week, then we drop. So we'll look at how the price will react here. So let's look at the cable. Oh, the cable paid us well last week. Yeah, the up move, which was around 120 pips, and the drop over 200 pips. I remember very well. Then it was here. I think this one, I took the trade where I got 120 pips only. Yeah, so my entry was around here, 120, and then I sold here. The week I was only targeting here. It was there is this big figure around here. I was targeting. Let me show you. My target was 4. Yeah, this was my target last week, and I was able to book a lot. Please, can you explain to me how you drew the fair value gap on the monthly time frame on the index? Okay, let's finish the analysis first, then maybe I'll mention 2 or 3 things about that one. Now, the pound dollar, first of all, let's just look at monthly time frame and see what we have there. In monthly time frame, this pair is bullish, first of all. And what we have been having is trading a monthly correction. Yeah, this bearishness. Don't mind about the dirty work here, but in lower time frame is clear. And I don't want to delete them because I use them as homeworks to teach the rest. So I want to clear this one. They're very important. So just don't mind. For now, just get the point what I'm talking about. It's bullish because after we had this break of structure here, we expected the price to go back to where? To seek internal liquidity. And among this internal liquidity is this bullish mitigation block, this one, the red candle. That's what we expected the price to seek when it was dropping. And up to last week, the price was able to come back to this monthly bullish mitigation block. So if we look at weekly time frame, this is weekly time frame now. This was the BMS above, and this is our bullish OB here. Okay, let me remove these ones, then I will add them when I will need them. Yeah, this one looks better. So I've marked it with this blue. I don't know which color. This one is sky blue or what, but this blue here is the weekly bullish order block. That is where I expected the price to come back before we start doing what? Resuming the uptrend, because this was a correction. And if we look at the daily time frame, the other week, not the other week, last week, when the price was here, we expected the price to correct first before dropping to take out this liquidity right into this weekly order block. Now, we are already in the order block. What do we expect? We expect to resume the uptrend. And now, we're just expecting, but we don't say that the uptrend has started. What will confirm for us that the uptrend has started is when we see a particular pattern. For me, I really depend on patterns. Okay, let's see in 4-hour time frame. But that's a clue, first of all, that there's a possibility that this week we may be bullish on the cable. Because at first you saw on the dollar index, it was supposed to resume the somehow being bearish. Therefore, the clue for us to be bullish in this cable, it's validated, at least it is being supported. So more support will be when we see some other patterns that will be able to give us confluences of looking for buy setups. Here, the price is already at the weekly bullish order block. So in 4-hour time frame, also we look for other patterns that can be able to guide us to take this trade to be bullish. I don't need this one now. Its work is done for now. Now let's look at here. On Friday, the price was able to drop, create a liquidity here, took out the liquidity and up to that zone, and we have this red candle here. This is a key zone, and then we have a fair value gap here, 4-hour fair value gap. That one is very important because you can see this low and this high, then this is our fair value gap. This is our internal liquidity. So let's see what we have in 1-hour time frame. So in 1-hour time frame, we have this bullish order block, and again we have this. What's that? See that? This high was taken out and this high was taken out. So these are clear break of structure here. That's the first clue that we are resuming an uptrend. So this is our BMS. That's the first clue. Secondly, we can be able to see there's a low that is created here. And we had this 4-hour bullish OB and this 4-hour fair value gap. So that means possibly on Monday, we expect a drop, fill the gap right into this bullish OB before we go up. Because as you can be able to see here, we had this high being taken out and the body at least closed above this high. And again, with this high, the body closed above. That is a break of structure. Then what we're supposed to look at is the internal liquidities. And among those internal liquidities is the fair value gaps and the bullish order blocks. Those are the things we're supposed to look at. And if we draw our trading range, that is our trading range. And this trading range is from this low to this high. As you can be able to see, our entry zones using the 3-bar pattern and this trading range, you can be able to see entries usually lie at OTE1, OTE2, and OTE3. This is a confluence that this area will be the area of entries. Secondly, this is where we have our bullish OB, and there is a gap here that needs to be mitigated. And lastly, we have a swing low here that has to be taken out. There's liquidity below here. So if they sweep this low, fill the gap right into the OB, we'll be able to take our buy trade from this zone. What about H1? What about H1 bullish OB BMS? Let me see that one. You mean this BMS and return to this OB? Okay, it's possible too, but there is this what we call premium and discount, if you remember well, because this OB, of course, it's on a good position. Yeah, the price may do this, come back to this OB, and then go up. But on looking at this, since this is our trading range, and yeah, this is our trading range, and there was this OB. It was never mitigated. Remember that in the first place. And again, from this trading range, you can be able to see this is our equilibrium price. And most of the time, high probability trade we take from discount zone, which is this. This is our discount. Of course, at least this one touched the OBs are 50% above equilibrium, 50% on discount. It's a good trade, but, and okay, yeah, there is also I see a mitigation block at the area. My friend is talking about this OB. The reason I expect the price to go back here is because in 4-hour time frame, there is a fair value gap. Let me see in 1-hour time frame if you can be able to see that fair value gap. Yeah, there is still a fair value gap in 1-hour time frame, so there is chances that the price have to mitigate this. But if the price reacts from this one, it's good. We can buy from here. But again, still we can buy from here. But I love buying from deep discount. But the most important is the pattern. The pattern that occurs in M15, M5. I know there is some of you don't know about the patterns I'm talking about, but I'm sorry for that. But we have some patterns that are aligned with the strategy that you're trading. These patterns are the ones that guide you which zone the price is going to respect than the other one. Also see the mitigation. Okay, let me see that mitigation block. This one. Okay, this one, of course, is a good mitigation block, but the problem is it is at a premium, and we want to buy at a discount. So I will only concentrate on discount PDRs. So this will be the best zone to take your buys from. But still, if you get a pattern on this one, it's good to go. If it's at this zone, again, it's good to buy. But we'll see the kind of price action that will be displayed on Monday at these zones. So let's look at the euro dollar. Okay, wow, this one too paid well last week. I didn't buy, but I sold up to this mid figure here. So we don't need you. Your work is done. Okay, the same case like the other pair, the pound dollar. On weekly time frame, can be able to see this zone, and there was this fair value gap. Just look at this high and this low. This has been a fair value gap, and you can be able to see the price has been mitigating that fair value gap, and it's done. even if it hasn't touched this one, it touched this. So the fair value gap is fully filled. Now the price is to react at this zone, weekly zone. So if we look at the daily time frame, yeah, there is still no pattern, but at least we need to see the price to react from these zones, either from this mid figure here, or if it goes back to this big figure, or react from this weekly key zone. But the lower time frames now that will determine the kind of pattern that will be displayed. So if you look at in 1 hour time frame, on Thursday, the price on Friday we had a bank holiday for the dollar and CAD, so the price didn't have significant moves. See, there was a consolidation on Friday again. There was another consolidation. Now this one, I expect it to give an opposite behavior like the one that we saw in the dollar index. The dollar index, as you saw, we expected a breakout from that accumulation right into certain level before going up. The same case here, we expect a breakout from this accumulation to this weekly OB. This was a weekly bullish order block here, this line, into this before we move up. So the pattern that will be displayed here is the one that is important. But I'm expecting this pair to be bullish too, because the dollar index is going to be bearish. So there's a possibility that we may have a drop first before we go up, so that this one becomes the low of the week and maybe the turtle soup, or to form as a PO3 pattern, whereby this is accumulation, manipulation, and distribution phase. So that's what I'm expecting you to do. So it's for you to look and watch and see how the price is going to react here. If they give us this kind of pattern here, then go up, fine, we'll take that. So the next pair is USDCAD. USDCAD, we have, okay, it's good to start from higher time frame. Now, if you look in this monthly time frame, you can be able to see that this pair is bearish. Yeah, USDCAD is bearish in monthly time frame, because you see this is the stop hunt, yeah, and then we have a break of structure. So what do we expect? We expect the price to go back to the breaker. Our breaker is this red candle here, which has drawn it with this. And if you can be able to see, the price returned to the breaker successfully. Good. That means we resumed the trend, or the downtrend here, after the mitigation back to this breaker here. So the price has been bearish. And again, if you look at this, you can be able to see there was a BMS here when the candle dropped here. So this was a correction back to this, to an OB here before we drop, right? Okay. Another thing you're supposed to look at here, no, that is in weekly time frame. I want you to see in weekly time frame the same pattern, but now it is a type 1 pattern whereby we have a mitigation block. In monthly time frame, we had a pattern that has a breaker. Now this one has a mitigation block, because see, this is a higher high, higher low, then a break of structure here. Okay, let me write so that you can be able to see. Yeah, drop here, break of structure. So we expect a return to the mitigation block. And now this mitigation block is this red candle. So we highlight this red candle. That's where we expect the price to come back to. So all this one, this candle has become, was our point of interest. And now we want to look at other confluence that we're able to see. If you look at this, this must be a bearish OB. Okay, this is to wiki, so I will use this one as my bearish OB, the source of this move that broke structure. So its low is this one, that 1.26, which is a big figure. So this was our bearish order block, weekly bearish order block here. And this is the mitigation block. So let's see what we have in daily time frame. You're still seeing how this zone was a very confluential zone. Just want to show you how this zone has been aligning from monthly time frame all downwards. So we saw in monthly time frame, it was where the breaker was. In weekly time frame, that's where the mitigation breaker was. And now in daily time frame, can be able to see we have a BMS and yeah, break of structure, shifting market structure. So the mitigation block here is this. Sorry. Okay. That is a mitigation from daily. You see, that's where still the market reacted. And again, we have this OB here. That's where again the price reacted from, and you can be able to see it is a big figure. So this was a nice selling zone if you were able to take the trade on Friday. But for me, I didn't. Reason why? The price is already at the bus stop. I have to wait for the rest to the other passengers to get out of the bullish bus so that I get mine to drop with it. I bought mine to sell. So let's see in lower time frame. So in 4-hour time frame, there was this OB. See, still the price is reacting at that zone. So the price has respected these zones from monthly time frame all the way to 4-hour time frame. So let's see what we have and what do we expect. First, in dollar index, we said we expect a bullish before a drop. So the same case, at least we need to see some kind of behavior that looks like that of the dollar index, because this too is a dollar card. So in 1-hour time frame, let's see what we have. Okay, can use this. What's that? Good. We had this high. It was taken out. The high was taken out. Break of structure here. We have a break of structure. And we have liquidity being taken out here right into this OB. So my point of interest was this, will be this. So I expect the price to go back, sell. If the price comes back here and gives me a sell pattern, this is where I'll be sell. And this will be a nice swing trade. I'll swing until my first target will be this zone here before I start again thinking for the another thing. But first, I expect an up move before a drop. The same way we'll be expecting from the dollar index. I have gold. Gold, it has been bullish all the way right into this weekly bearish OB, but it's not yet there. So I expect it to go back into this weekly OB before we drop this, because the kind of behavior that is displayed here, I want you to compare it with this. Where is this picture here? If you compare that gold behavior with this one, you can be able to see that there is some similarity, because I want you to see we have break of structure, we have a fade below here, and this is the one that had a big wick, then equal highs being taken out right into this OB here before drop. Now, let's see in gold what we have. I want you to see if it's the same structure. So you can be able to see a break of structure here, the low, this is the failed low, and then the equal highs, then into this OB. So this is the one that was marked. Sorry. Let me use this. that way. I think that's how that chart was looking like. Equal highs, break of structure here, failed low, this high being taken out, then right into this OB, and this is a weekly OB. So I will be expecting to sell from here. Okay, let me show you once more. See that break of structure, a low, then a failed low, then equal highs being taken out. Then there was this OB here, which was, in this case, it was a weekly bearish order block, which is this. So we'll be selling from here, the drop. Okay, now let's see what we have in a little lower time frame. Let me get even to the lower time frame. That's H1. H1, you can be able to see we had a clean equal highs. So this is the liquidity above here. And I expect the price to take out this liquidity right into the weekly bearish order block, then we sell off. That's what I will be watching. And that's what I will be looking at. If